Today I'll be showing you how you could have made a 454% profit from options. This video will be a trade analysis on my trade in CRM, why I took it, and why it went well. So this trade comes after the breaking political news in regard to the presidential election. If you haven't heard, the AP has recently called the results of the election, and this is a part of my rationale for this trade. Now usually news is not so much a reliable indicator. It's a big no-no in my strategy, as there's always some extent of subjectivity. You want to base your strategy on objective indicators, right? Well, in cases where news is something significant, such as rates or the presidential election, 100% has the power to sway the market. So a bit of background information on CRM. It's a stock within the software and IT sector that's been performing well at the time of this trade. CRM is one of the leading stocks in the software IT sector itself, but if you want to take the time and look at other leading software IT stocks like ORCL, PLTR, you can see that these stocks are also on a general upward trend. So market conditions and sector performance are crucial to the success of a trade. If you don't see those and they're not aligned with whatever strategy you use, it's probably a good idea that you avoid the trade, right? I said this in a past video, but a stock that has a bad setup in a good sector is more likely to be profitable than a stock that has a good setup in a bad sector. So after making sure the market conditions check out, next thing we're looking at is the pattern. So right here we can see an ascending triangle. It starts right here beginning on October 29th, 2024. This is on the daily chart. So we can see right here, this green line is known as the 20 MA. It bounces off that, never closes below it. It uses it as like a line of support. Same thing with that 10 MA. We can see that it's building higher lows. We can also see the range tightening right here. And down here, if you look at this blue line, this is called a 22 VMA, otherwise known as the 22-day volume moving average. You want to see that die down. So if we look a little further back, we can see it was at like 5.8 mil. And right here it's at 3.7. I mean, you really just got to look at it. Obviously it's dying down, but we can go to the 1 hour chart to confirm this. So as we can see on the 1 hour chart, it continues to build higher lows where that 20 MA is on the daily. It also builds lower highs, but what's significant in these trades, you want to see the higher lows build up, like go upward faster than the lower highs move downward. So something like this right here, where it's bouncing on a line of resistance and tightening up within a range, that indicates bullish price action. You don't want it to look like this, where the lower highs are going downward faster than the higher lows are moving upward, because that indicates more bearish price action. You want to see it move up, right? Which is what we see right here. It's moving upward faster than you get the idea. So once we have a proper rationale in place for a trade, all we're doing is waiting for the breakout, which we see, wham, right here in the first 5 minutes, and this is on November 6th. I actually didn't take this until this candle right here when it closed at 306.07. So for options, I purchased 307.5 calls expiring on November 8th. This was the strike price closest to the price at the time, which was 306.07. You can see here on the second candle of the day. It had an open interest of 1,000. Always make sure, if you're going to buy options, whether that be calls or puts, make sure it has an open interest of at least 1,000. If it doesn't, you're going to have a hard time selling your contracts, meaning you might lose money just because no one buys your contract. So you want to make sure there's at least 1,000. And 307.5 was just out of the money, meaning it would be less riskier than contracts further out the money, like 310 calls. So trades are best within the first 3 to 5 days. I bought these on November 6th, so that would be day 1. Trades are best in the first 3 to 5 days, so the expiration date being on November 8th works perfect, giving me 3 days to make a profit. So we're back on the hourly chart for clarification. This is where I purchased the contracts. So if we look here, I set my stop loss. If you look in the upper left corner, it says low 303.07. This is my stop loss, as this is the low of the day. And so the main focus of the trade when I enter is to watch it and sell out in the case that it does go below that low of the day, and sell out to mitigate losses. The main focus in trading is not to make profits, but mitigate losses and learn from them. So if we fast forward a little bit to right here, November 7th, this is when I'm able to set a trailing stop loss on that red line, otherwise known as the 10 MA, which is at 305.06. This is the same hour where 10 MA becomes greater than the lowest low where our original stop loss is at. So that's the rationale from changing to that consistent stop loss to the trailing stop loss. So right here at the opening candle of day 2 of the trade, or November 7th, we see that it closes above my strike price, which was 307.5. This closes at 308.32. So at this point, I scaled out 50% of my contracts. And at this point, my rationale for scaling out the rest of my contracts is either when the stock price hits the 10 MA trailing stop loss we were talking about on the 1 hour, or in the last hour of November 8th, the day that the contracts expire. So fortunately, as you can see here, none of these candles closed below the 10 MA, and I was able to hold out until the last hour. I'll show you exactly where I sold out. Let me get there. Oh, we're already here. I sold at this candle right here, and that secured me a 454% profit, going from $262 per contract to $1,400 per contract. And that's going to wrap up the trade analysis for CRM. I hope that you were able to learn something or a couple things from this video. As always, if there's any questions, leave them in the comments or direct message me. I'm more than happy to answer them for you.